Hello everyone. Welcome to Mirae Sharekhan's weekly commodity forecast, where we break down what happened, why it happened, and how it can impact commodity markets in the week ahead. I'm Anuj Chaudhary, research analyst at Mirae Sharekhan, and let's start with the macro picture. Macroeconomic headlines. Why an impact? China's latest data shows that factory output and retail sales slowed in November, and fixed asset into investment also declined. It signals slower economic momentum in China, which is a key consumer of industrial commodities. Impact. This keeps sentiment cautious for base metals and the industrial commodities. At the same time, the Chinese yuan strengthened to the best levels in 14 months, moving close to 7.05. A stronger currency reflects stability in China's financial markets. This can help reduce pressure on imported commodities. Iron ore prices fell after China announced a licensing system for steel exports starting January 1, even though steel exports are at record levels. The move introduces uncertainty around steel exports. This creates near-term pressure on iron ore and steel-linked commodities. From policy cues, China reiterated proactive fiscal policy but no major stimulus push for 2026. Commodity markets are unlikely to see a big demand boost from China in the near term. Globally, the US Federal Reserve cut rates for the third straight time, bringing rates to 3.5% to 3.75% range. Lower rates support liquidity. This is positive for precious metals like gold. Commodity focus. Gold. Why it's strong? Gold prices moved higher last week. The US Fed conducted an open market operation to buy $40 billion of short-term treasuries, adding liquidity to markets. At the same time, global gold ETF holdings rose to the highest levels since December 2024, with investors adding gold after the Fed decision. This shows strong investment demand, which supports prices. Technically, gold broke out of a consolidation, hit a fresh all-time high near 1,35,263 and continues to trade above key averages. What to watch? Resistance at 1,37,420 and 1,41,350. Support at 1,32,300 and 1,31,400. Overall, the report maintains a positive bias for gold. Commodity focus. Natural gas. Why prices fell and what next? Natural gas prices corrected sharply, with MCX prices down nearly 23% last week because weather forecasts turned milder, which reduced immediate demand expectations. However, sub-zero temperatures across several US states continue to support heating demand. At the same time, US gas rigs fell slightly while production remains strong. The report notes that the weather-driven correction is already priced in, and any upward revision in weather forecast could support a price rebound. Key levels to track. Buying zone around 374 to 376.50, targets at 405 and 444, while support is seen at 345. Weekly price change. What moved last week? Gold and silver both gained strongly, with silver outperforming. The gold-silver ratio declined, indicating stronger silver momentum. The dollar index weakened, which typically supports bullion. Base metals saw mild weakness overall, reflecting cautious global growth signals. Weekly event calendar. Why this week matters? This week, markets will track China's industrial production and property data, US inflation, retail sales, and employment data. Key housing and consumer sentiment indicators. Bank of Japan monetary policy decision. These data points will guide rate expectations, currency moves, and short-term commodity volatility. Check our detailed research report in the description to get an in-depth analysis. That's your weekly commodity forecast from Mirae Sharekhan. Focused on the why and the impact. Track the macros, respect key levels, and we'll see you next week with another update. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.